Your credit score is basically your financial report card. If you live in India, you might have seen numbers from 300 to 900 on reports by CIBIL, Experian, or Equifax. But here's the thing. This score isn't just a random number. It's the key to getting loans, scoring low interest rates, or even landing that dream rental house or shiny new credit card. In this video, we will discuss ways to improve your credit score. So, how's your score actually calculated? There are 5 main factors. First, your payment history. That's the single biggest piece, about 35%. Every on-time or late payment counts. Then comes your credit utilization ratio. How much of your credit limit you use. That's another 30%. The longer your credit history, the better, about 15%. Lenders also look at the types of credit you use, like loans versus credit cards, for 10%. Finally, new credit inquiries, the number of times you've applied recently, make up the last 10%. Now, how do you raise that score fast and keep it up there? The first rule, never ever miss a payment. Always pay your EMIs, credit card dues, and loan installments before the due date. Even one missed or late payment can stick on your report for years and drop your score by 50 to 100 points. Next, aim to keep your credit utilization low. Say your card limit is Rs100,000. Try to use less than Rs30,000 each month. High spending on your limit looks risky to lenders. If cutting back isn't easy, ask for a credit limit hike, but don't use the extra limit unless you truly need it. Another surprisingly effective move? Keep your oldest credit cards open, even if you barely use them. Closing old cards shortens your credit history, and that can actually drag your score down. Also, mix up your credit types. If all you've ever taken is a personal loan, lenders don't get to see your versatility. Try to have a blend, maybe a home loan, a car loan, and a credit card. This diversity tells banks you can handle different debts responsibly. Now, don't go wild applying for every card or loan either. Each application triggers a hard inquiry, which can dent your score temporarily. Too many in a short time, and you look desperate for credit. Space out your applications. Use pre-approved or soft-check tools when possible. They don't impact your score. Here's a pro tip. Check your credit report for mistakes. Errors happen more than you think, like loans you never took or payments wrongly marked overdue. You get one free report a year from each bureau. If you spot an error, dispute it immediately. Fixing mistakes can quickly boost your score. If you have no credit history, a thin file. Start with a secured credit card backed by a fixed deposit. Use it sensibly, pay the full bill every month, and you'll build a score fast. Or become an authorized user on a parent's or spouse's card. Their good behavior helps you too. Some banks now offer credit builder loans, which are safe ways to establish history. Paying utilities or rent via credit card and making sure it's reported can help too. And always set reminders or auto debit so you never miss a due date. The bottom line? It's not just about fixing your score for a quick loan. Build healthy, consistent habits. Avoid maxing out cards, steer clear of informal lenders, and don't let emotions decide your spending. Good credit means you can negotiate better loans, get emergency funds, and chase big dreams, like buying a home or starting a business. Don't wait until you need a loan to care about your score. Start tracking, stay disciplined, and use credit smartly. With a few months of focus, you can get your score above 750. And when that happens, the financial world really does open up for you. If you liked this video, click on the like button and subscribe to this channel.